quite an interesting week if you are invested in technology stocks and particularly in Chinese stocks. Many companies' stock charts currently look like this. They're back at the bottom of previous levels here. This is for the China Internet ETF Crane Shares, which tracks Chinese technology stocks, but also for individual stocks, like of course NIO. We are back at the lows. Meituan Dianping, also Chinese stock, back at previous lows. But generally this pattern can also be found in US-based technology stocks like Baidu here, as well as Nano Dimension. And these are mainly high speculative technology stocks that don't have earnings yet, that have high valuation multiples. So in contrast to that, for instance, Tesla here is doing quite better. It's a higher market cap and also has already positive earnings. So let's go through some of these charts of the companies in my portfolio more into specific, and also talk about not only the chart but also news and fundamentals aligned. So let's start with the NIO chart here. And I'm not a technical analyst and I'm also not day trading, but what strikes me here is this triple bottom pattern here that we can clearly identify. So these are now roughly equal lows, and it's bouncing off this support line here around $34 3 times in a row. But still, NIO is in this continuous descending downtrend here, and it's forming a really big wedge pattern with the support coming from below. And now the question is, well, very soonish we either need to break it to the upside or we need to break it to the downside, right? So if we take a look at the triple bottom definition, what we need to have for this definition is an existing downtrend, the 3 lows, as well as the volume dropping off. And that's exactly what we have here. Also, you see the volume charts here are getting lower and lower, which means that less and less shares have been traded in the last couple of days. So yes, NIO's pattern here really meets the definition of this setup. And usually by the statistics, in 66% of the cases, there is actually an upward exit. So it's more likely that this pattern actually is going to break to the upside than to the downside. But the only thing that is very certain is now that this is coming to an end here, this pattern. So in the next couple of weeks or even days already, we will see a break of this pattern and then have a quite juicy reaction in my point of view. And whereas this is mostly short-term price action, and I know it could totally break to the downside and it has lots of downward potential in that case, I rather think there are some good reasons on why we actually would see a move to the upside, given the previous macroeconomics that are pointed out in my previous videos that are responsible for the current price action, and also the company news. So one reason previously discussed for this overall downtrend has been the weakness in Chinese stocks because of some macroeconomic events and also political instability. But I do see that this narrative may change in the coming weeks. For once, China has now posted quite impressive numbers in terms of GDP expansion, 18.3%. And that's, of course, coming from lower numbers, and it's also short of the expectations there. So yes, take these numbers with some caution. But on the other hand, it's, these are the fundamentals which are not going away and are not going to change. China is doing quite well economically, and an economy that is doing well is obviously also good for the companies that are having their customers in this economy and also for the revenue streams in that country. So therefore, this should be fundamentally good for Chinese stocks in the future. Another reason previously discussed is the rise in the bond yields. But now if you look at the chart, you can see that the bond yields for now have topped out and are kind of reversing a little bit. This may be not a sustainable move, but for now, this should be good news for growth stocks in general. And that's interesting to see this short-term reversal here despite actually good job numbers and also higher inflation numbers in the US. But this may have something to do with what is currently going on in Europe, and as this Deutsche Bank analyst is pointing out, could actually weaken the dollar.
First thing, more European growth, more growth outside of the US. And the second thing is we have tended to de-emphasize the importance of US rates for the dollar. You've obviously had a very large move in the US, in US yields. You have now priced quite a fair bit. But if you look at the medium-term correlation between interest rate differentials and currencies over the last year, it's zero, what matters a lot more for the dollar is expectations for the Fed in the front end and real yields. And given that you have priced now a fair amount, the first quarter was all about U.S. fiscal exceptionalism. I think the second quarter and beyond is going to be about global growth, the global reopening of the economy, which should be dollar negative.
So in case this analyst is right, what you can see here is the Chinese internet ETF here, which basically lists most of the Chinese tech stocks. And you can see this recent sell-off here coming back to the lows now. And the Chinese yuan versus the US dollar. So meaning that if this orange line is high, then the Chinese yuan is more strong than the US dollar. And now with possibly a weaker US dollar in the next couple of months and weeks, maybe this will also here correlate once again with a rise in the Chinese technology shares. Because as we can observe here in the last couple of months and years, if the yuan was actually going higher, this correlated quite a little bit with an upwards moving in the Chinese technology stocks. And also in regard with the US, China, as well as the Europe and China issues, starting with the Xinjiang issues, but also delisting of Chinese stocks and the new containment policy and strategy by the Biden administration. We have some news now that European politicians, for instance, Merkel and Macron, have been talking with Xi Jinping, and the outcomes so far seem to be that Europe and China will likely to continue on their path of, not decoupling, but rather doing business together. So we cannot see that this kind of relationship between Europe and China is currently unwinding. And that's obviously meaning also for the US that they cannot contain China with an alliance with Europe here together. So all of these are just, tiny bits of the pieces here of this overall puzzle. But I just want to highlight them as some of the patterns that I found in the last couple of days, where I think the current narrative for this downward trend in Chinese stocks is kind of eroding a little bit here. So we could possibly expect a reversal in this trend of a sell-off of Chinese tech stocks that has been stronger of a sell-off than, for instance, the US counterparts. And therefore, right now, for me, presents a buying opportunity, to be quite honest about it. In case of NIO, we also have a very, very strong backlog of good news, good company news that have not moved the stock price in the last couple of days. And now this week, we got even more. For instance, 5,000 swapping stations and charging stations will be built together with Sinopec. In my last video, I mentioned how big of a deal that is and what a big of a confirmation to the NIO business model that is. Now we also have the numbers. 5,000 swapping stations is in line with my expectations of my new NIO business case that will actually be able to feed more than 1 million NIO cars in the fleet. On top of that, we have leaks and official news around some couple of new things that are coming up that could be potential catalysts. For instance, announcements around Europe market entry, which will be official in the beginning of May, as well as the earnings report for Q1 much earlier this time than usually, already on the 29th, I think, of April. And I think the earnings are this time a little bit earlier because I think they have those big announcements coming up with Europe entry, as well as some official news finally, I think, around the factory. If you look into the 2020 annual report, you can actually see that NIO has also to renew the JAC agreement. I think parts of that actually will be that they are going to officially announce the second factory, which they're already starting building. So I think they will have an official release to that. That's what I have previously covered already in my video about that they will bring it to a total capacity of 600,000 annual capacity. And I think that might be very official very soonish. So that's maybe also why they make the company earnings earlier, because that way they can also respond to the analyst questions and also maybe even announce that during the earnings call or something like that. So these are some reasons, both on the macro side as well as on the company side, why I think there is reason that this pattern could actually break onto the bullish direction. With this super large correction in NIO valuation, the company has also become quite cheap or reasonably priced if you consider 2023 earnings. According to my projections, NIO will be making around 25 billion in sales by 2023. So considering that NIO is currently only priced by 2.4x price to company value by 2023. And considering that in 5 years' time, by 2025, I think NIO has a realistic chance of making north of 60 billion in US dollars annual revenue. And given that the current valuation is getting more and more interesting for new investors to get in and invest in NIO while it is still in this downward trend. And given the sell-off and the change in the macro trends, NIO is not the only opportunity out there right now in my views. I think also Baidu is looking increasingly good here, having found a new base after this big sell-off because of Bill Huang's fund blowing up. And now we also have the official filings, the 13Fs, where we can see that the prime brokers like Morgan Stanley almost have 0 shares left in Baidu, which kind of shows that the selling might soonish be over because of this fund blow up by Bill Huang. As well as on the company side, we have some interesting stuff, for instance, that they get new licenses here for operating driverless buses in China. So that's good on the autonomy side and the Apollo side of things. But also Baidu is working on some pretty big stuff when it comes to healthcare, which I think will be a future big trend, releasing, for instance, machine learning, biocomputing frameworks like Pedal Helix. And that can be used for applying artificial intelligence, for instance, for drug discovery. So I think we will hear much more about this in the coming weeks and months from Baidu, and these are really huge potentials for which Baidu is really well positioned to capture them. Another company which I think could benefit from a reversal in Chinese tech stocks would be Xunlei or XNet. And if we look at the chart, it also has this double bottom right now, but obviously would need to get over $7 a share once again if it wants to come back into this upside bullish pattern here. But the main reason why I'm picking up more shares in this small speculative position of my portfolio right now is because the earnings call was good. The company earnings for Q4 were good. There was a good outlook for this year. The company has really big customers for their content delivery network, including Bilibili, which is kind of the YouTube of China. They have Momo as a client, which is a dating app. Xiaomi is not only a backer of the company, but also a customer. And then you have iQIYI with Baidu as a parent company, also for video streaming using the services of Xunlei. Although it's a small company, but they are having a big cash cushion. They're now profitable in the first quarter, and they have announced that they're going to buy back shares. So this will be good for the share price, obviously, as well. So the fundamentals of this company are solid. It's low valued, so meaning it doesn't have a high multiple on its sales. But the main problem for this company, I think, is that it's not really well known in the West what it's doing. It's a small company. They don't have a large PR, although there seems to be good pent-up news that they want to disseminate quite quickly. But for now, I think there's not a big understanding of what this company is doing and the opportunity aligned with it. But just think of that, like if their clients are doing well, this company is possibly also likely to do well. But on the meantime, this is a very speculative play. It's quite volatile. That's good on the upside, but really bad on the downside. So expect even up to plus 20% and minus 20% movements in the stock. And so that's also why for me, this is a small position, but also a long-term hold here. So that's kind of summing up already what I'm currently doing, trying to scale into companies that are currently low in value and try to increase my positions there. I still remember when I invested both in Futu and Tiger, for Futu below $40 a share, for Tiger below $4 a share. Back then, it also took quite some time until these positions actually also matured and investors picked them up as well. And the stock actually adjusted to where I also think it should be. So now, given this current tech sell-off as well as the China macroeconomics, I would rather go for Tiger, actually. That's what I'm doing, adding to my Tiger position, than going too deep into Futu, given a much higher valuation of Futu currently already, in contrast to how much Tiger has increased its valuation. Another learning that I had in the last couple of days that has actually worked has to do with options trading. So if you're following my trades in the Patreon network, you will have noticed that when Futu actually made a little bit of a recovery here up to $170 a share, what I have done is actually that I sold call options with a strike price above $200. So I sold this call option to someone who made a bet that actually they think that Futu's bull run will continue to more than the strike price, for instance, $200 a share. But instead, as we can see, Futu peaked at around $170 a share and the share price went down again, which in turn means that the one who was buying this call from me actually lost this trade because this call option expired worthless and I kind of collected all of the premium aligned with this call option. So that means that's a way of actually trading around the price movement of the stock, around all of this volatility, without actually having to have like a long position in the stock at the same time. And that's something that could actually also work in such kind of a downtrend movement, and also in particularly with the very volatile stocks. And that's also a strategy which I'm using currently with NIO Stock. So as we have this support base here around $34, what I'm currently doing is that I'm actually selling puts. So I'm selling this option contract to somebody who says NIO will go maybe below $34 or may not be above $38, for instance, in the next month or so. These options are currently also more expensive, so a higher premium, around $4 to $5 per contract. So I'm hoping that by the time that this put option is expiring, that NIO is actually trading above the strike price. And this is basically a strategy that could currently either work if you are on a long position with NIO and you want to generate some money around it, or if you're looking to buy the shares at a discount by, for instance, looking for a lower strike price. And in the end, if it all turns out that we break this pattern in a bullish movement upwards, chances are that you're just collecting the premium. So this is just a strategy around a current position that I have in my portfolio that is now working in terms of what can be done even in such a downturn without me having to sell my position, or what I also experienced in a passing contrary, what has not worked is trying to time such upward movements in terms of a breakout, trying to predict when NIO could actually find the bottom and break out from here. I tried to play some call option bets on such points before, but some of them I made some money when it kind of had a little spike, but most of them obviously also getting worthless. So yes, these are some more advanced strategies around options trading. I'm trying to kind of teaching myself and learning more of how it's actually doing, and I'm sharing it here on the channel, but you need to be aware that these are really risky strategies and you could actually lose most of your money. So as mentioned, these are my insights from this week, strategies around it, and the outlook into the next week. Let's see how it unfolds. In case you are looking for more frequent content, I'm currently really busy on doing daily stuff in the Dongxi network and the community feature. So looking to do more videos again very soonish, but right now it consumes all of my time during the day. So I hope you enjoyed this video and summary of this week. Please give it a like and share, and then see you soon and enjoy the weekend.